We have a lot of talk about the default. Everybody agrees we can't have a default. It would be terrible. We don't spend quite as much time talking about what lies behind this crisis, which is addressing the debt problem. There is a real debt problem, is there not?
Well, there is. I mean, Pete was right. And I think the way to think about the debt ceiling crisis is to break it into two pieces. What do we have to do right now? And that's going to be some near-term spending restraint, like returning unspent COVID funds, some of the spending caps, for example, that Senator Manchin has talked about. But longer term, we've got to go to a different model. And we have to have either a spending limitation, as I've argued in the past, or some kind of model, for example, like the Swedes do, of a fiscal policy commission that takes a look at the budget. But we need that longer term discussion, dare I say, maybe even another commission to take a look at it. But it has to be separate from the short term, which we have to do first.
But I wonder, we'll come back, if we could, to possible solutions to the immediate crisis with the default, or would-be default. But are the Republicans, some of the Republicans who are right, we'll never get to the second part if we don't hold hostage on the first. That's basically, as I understand it, a lot of Republicans' position. If we go along with you on the debt ceiling, we'll never do the second part, which is so important.
Well, that's right. But when you catch the car, you have to know what to do. And you also have to have a plan. And since neither side has what I would call a reasonable long-term fiscal plan at the moment, the right thing to do would be to take a deep breath. The problem is the same problem, actually, when Pete talked in 1993. It has to do with runaway social spending. This is at a time where we need to spend more on defense. We need to spend more on preparing Americans for the future. So we're going to have to make some fiscal adjustments. Some of those may be tax increases, some may be spending adjustments, but we have to pivot to that world.
So let's talk about getting past the immediate crisis for the moment. You know Washington well. Put aside for a moment what you think is the right answer. Let's talk about what is the doable answer, because that's terribly important. There are some red lines here, such as, for example, the Republicans say we cannot increase revenue. Full stop, can't do it. Is that right? Does the White House have to give on that point? We're not going to do anything in terms of raising revenue?
Well, I think in a negotiation, you have to let the other side tell you a bit about what it takes to have victory. And I think if Republicans have said there's no revenue increases in the near term, I wouldn't put that in a negotiation. I think a near term is the spending restraint. So something like returning the unspent COVID funds and a 2-year spending cap even. There's something that can be done so Republicans have a victory. Biden, I think, knows independent voters also agree with Republicans on many of these points, and he could come to the middle on that. That's where I think the solution has to be.
What about the work requirement? Because I suspect a lot of Americans do look at that and say it's not too outrageous to say you should have to try to work if you're really getting a lot of funds.
It's definitely not too outrageous. And if you look at polls, independents in the middle, about 2/3 support the work requirements. The only risk in a negotiation is when you start adding things that aren't central to the discussion, i.e. taxes, spending, you make it difficult to get to resolution. So each side has to look the other in the eye and say, well, what does he or she need to win, or at least think they've won, and move on.
So this week we saw the hopes go up, we saw the hopes go down. I mean, we heard they were making real progress, and then on Friday they stormed out of the meeting, which is not unheard of in Washington. You, Glenn Hubbard, knowing Washington the way you do, knowing the situation the way you do, how worried are you about an actual default?
I'm not terribly worried. That said, the probability isn't zero. And so the two sides have to be significantly working harder to come together. In the past, I always knew this was theater. It would simply work out, and we just have to endure it. This time, there's a little bit more uncertainty. So I do think pressure needs to be brought to bear on both sides to come to a near-term agreement and then pivot, as you say, to the longer-term discussion that we've really got to have as a nation.
So let's turn to that. Let's make that pivot, actually, to the longer-term discussion. Assume we get past the default issue. Now we're going to address it. You suggested, for example, a commission might be one way of doing it. We've done that with Social Security. We've done that with base closings. Is there political will on the two sides, at least enough political will, to actually do something about this instead of just talk about it?
There has to be. The math will catch up. We're already in fiscal year 2023 for the government. We'll have interest payments exceeding the money that we spend on children. That's crazy. We need to be spending more on defense. We need to be righting a number of ships in the country. We have to take a look at the composition of spending and revenue. A commission gives both sides a chance to have that discussion, and I think it's absolutely essential.
I want to come back to your book, The Wall and the Bridge, for a moment, because one of the issues is how can we grow the pie? by investing, spending the money, however much it is, in a way that grows the pie. Is there an appetite for that? Because Republicans certainly say it's all got to be about growth.
Well, but you also have the social support and the political support for growth. If we had programs that supported work, that prepared more Americans for the future that they will have, as opposed to a nostalgia for the past, we could do that fairly modestly with new spending. We would need to pay for that by cutting other spending or raising taxes, but it's doable. In my book, I suggested programs that together cost less than President Biden's student loan forgiveness. We know how to do this. We know how to find the money. We need to do it for something useful.
Let me go back to the here and now and where we are with the economy right at the moment and what the Fed needs to do, where we're looking at the economy. Let's assume we get past the default for just a moment. We hear that, in fact, maybe the neutral rate will go back down. What do you think, where do you think we are right now with the economy, and what does the Fed need to do?
I don't think this is a time for the Fed to do what markets are suggesting is start cutting rates in the very near future. The Fed, at a minimum, would have to keep the funds rate where it is. I would argue if there's a change in the funds rate in the next several months, it's probably up, not down. Inflation is still very, very sticky. So despite what markets think, I think the Fed still has an awful lot of work to do.
There was a report on the Bloomberg, actually, that in fact, if we get past the default problem, there will be a tightening necessarily in liquidity because the Fed has been spending, the Treasury, I'm sorry, has been spending down what's in the coffers. They're going to have to replenish that by issuing a lot of T-bills over the course of the summer. As a practical matter, that will soak a lot of liquidity out of the system. Will that tighten enough in itself? Some people say it's at least 25 basis points.
I don't think so. It's a modest effect, as you suggest. There are two ways in which those T-bills can be bought. One is through bank reserves, the other through money market funds. But I think it's a modest effect. The bigger concern, it strikes me, would be a credit crunch that's in the offing from the banking problems. If you're thinking about effective monetary tightening, there's probably another 100 basis points of effective federal funds rate increases in that credit crunch. That's the one to watch.
When will we have a sense of, in fact, whether we have that 100 basis points? Because I've heard that number before, but I'm not sure if we know yet whether we have it.
Well, that number is a blend between effects on small and mid-sized banks, where it would be much larger, and then, of course, the very large banks, where it would be very small. I think the Fed in the next several months will be watching that very closely, which is an argument for the kind of pause that Chair Powell has signaled.
So many of us are not particularly pleased with what we're seeing going on in this negotiation about default. The notion that we would even think about reneging on the full faith and credit is really embarrassing. What does it do to us globally? Does it affect the value of the U.S. currency as reserve currency? What is the rest of the world thinking right now? Will there be longer-term effects?
Well, I think they think we're crazy. And of course we are in this kind of process. But the point is we need a new spending process. We have had a series of budget resolutions and budget reforms over the years. I mentioned Sweden before. I think using something like the Swedish plan and the Swedish Fiscal Policy Council, it's hard to advise conservatives to look at Sweden as an example, but that I do. That, I think, is our roadmap.
Are there people in Washington talking about these things right now?
There are. But I think at the moment, the negotiation is so mired in each side thrashing the other, it's hard to get out.
What about think tanks? Are they helping?
I think so. I think they're trying to get information to both sides of the aisle on the costs of what is happening and on things that might be proposed in the medium or long run, as opposed to the action we have to take before June 1st.
So you're concerned but hopeful?
Always.
Always. That's Glenn Hubbard, I should say.